All right, we'll go ahead and get started here. If you have any questions, use the Zoom Q&A panel or feature, and we have people in the background that will be answering questions. With that, I'm going to pass everything over to Will Medina from our team. Will, take it away.
Thank you, Sean. Welcome everyone, and thank you for joining us today to discuss the basics of DPAs, what they have in common, how they're different, and what you need to know to start the conversations about down payment assistance without being a program expert. My name is Will Medina from our DPR team. We also have with us today other awesome members of our DPR team. They will be answering questions in the background, so use the Zoom questions feature to engage with them as we go. And before we get started, please note that today's recording of the webinar will be shared with everyone. Yes, it will. But what we'd like to do right now is we have an awesome crowd, so we'd like to hear from you. So we're going to go ahead and put up a quick poll for some audience feedback. So Mel, if you'd be so kind. Great. So we'd like to know what percentage of your business is made up of first-time homebuyers. So please take a second, submit your answers. Okay, great. So across the board, there's some experience. We'd love that. Whether you are experienced or it's new to you, we're hoping that you take something away today. So thank you all. Thank you all. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard to find resources like DPAs, grants, mortgage credit certificates, and other assistance. We provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. Ultimately, we are here to help you connect home buyers to the down payment help they need. So today, we'll discuss loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. So the current state of home buyer programs. Of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. That's really a catch-all category, though. We'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. For example, 63% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 43% are forgivable, either in part or in full, essentially becoming a grant over time. And 38% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. We'll break these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. So DPA is available. These programs are everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other homebuyer assistance. So who funds and administers these programs? I mentioned every state has at least one housing finance agency. City and county governments often have community or economic development departments or housing authorities. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with varying programs. Many employers like municipal governments, hospitals, and universities also offer their employees down payment assistance. There are community action agencies, land trusts, and so many other organizations out there, all trying to open new doors to homeownership and promote housing growth and responsibility in their market, your market. And they've all got funded and available down payment assistance programs. In looking at current DPA trends, we want to remind you that all state HFAs are open and accepting reservations. Even with COVID, HFAs had a record year in 2020, which continued through 2021. And by the way, loan officers, this is all purchase business. That volume has petered out a bit in 2022 with higher rates and continued appreciation, but we still see a ton of DPA transactions. Local programs are still available and new programs are frequently added. Homebuyer education remains online, and 84% of all DPAs are funded and available. Now, all of these programs share some basic universal requirements. For example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties, as long as they will occupy one of the units. They also require some minimal investment from the buyer to keep a little skin in the game. This can range from $500 to $1,000 or maybe more. But remember, these buyers are also investing time in the home buyer education process too. Buyers typically complete a home buyer education course to qualify for a DPA. And of course, these aren't cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. With those universal requirements in mind, let's take a look at the 3 most common types of home buyer programs and what's unique about them. But what we'd like to do is once again go back to you with a quick poll before we get started. So how often do you work with buyers using down payment assistance? Okay. So we have some that have never, some rarely, sometimes frequently. Great. As we stated, we're hoping that you take something away from this webinar to help you communicate that these programs are out there. So again, thank you for joining us. So now the 3 most common types of homebuyer assistance programs are the down payment assistance program, affordable first mortgages, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. Remember, as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So first, let's review down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So referring to the infograph here, grants are gifts that do not have to be repaid. Repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. Deferred or silent seconds, repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or there's a change in occupancy. And lastly, forgivable seconds, where some or all of the original down payment assistance is forgiven. Often a percentage of the loan is forgiven each year for a predefined number of years. As an example, it's common for a forgivable DPA to be forgiven 20% per year over 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses such as escrow expenses, rehab or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions, the most common uses. All of these uses help the buyer shed the costs of purchasing and financing a new home. One of the most common misconceptions about down payment programs is that buyers must be first-time buyers. In fact, there are about 2,200 programs across the country maintained in down payment resource. and 38% of them have no first-time homebuyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to the rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, make exceptions for veterans or certain professions, or just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So for example, many stipulate that the buyer occupy the property for a certain number of years. That may be 3, 5, 7, 10 years, and then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of assistance programs. So what are the eligibility requirements? Most have the following limits. Eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, AMI, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. We even have some nationally available programs integrated into down payment resource. Now, some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, such as a requirement of a FICO score of 620 or higher. Homeownership history makes a big difference too. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners too. And remember, a first-time home buyer is simply someone who hasn't owned in the last 3 years. I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying costs for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. As an example, think about someone obtaining FHA financing. They're asked to bring 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premiums and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to dump into savings, which has been shown to improve default rates. Increased purchase power offers a competitive advantage. Many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more, down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now we'll look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable First Mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage interest costs, and allowances for higher loan to value, or LTVs. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. You can typically combine these affordable first mortgage products with down payment assistance and/or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's look at an example of how MCCs work. Take a $200,000 home. The buyer closes and makes 12 payments in the year. They've paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a credit, so $2,000 in this example, but the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. So I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $7,500 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $10,000 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of like educator, to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, etc. Or protectors could include police officers, sheriff's deputies, corrections and probation officers, and more. So look for these programs in your market. Another targeted audience of eligible buyers is our armed forces, active duty personnel, and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or Reserves members. So we've given you a lot of information today, but we want you to know how to access all of these DPA programs once you leave the webinar. So I'll show you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com and do an eligibility search for free anywhere in the country to see what's out there for your client. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So check out DPR, let your clients know what's available, and talk to your lending partners about which programs they offer. And please let us know if you have any questions along the way. And we've gone ahead and listed a few of our MLS partners here, and we're continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. Click it, and we will tell you or your client which programs are available for properties they like the most. Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we have a version for you too, which allows you to control which programs consumers see so you are aligned with the product offerings at your company. So what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. And you can use your Down Payment Connect link on your website, in your email marketing, and all social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on these opportunities. And we'd love for you to join our growing Facebook group, Down Payment Insiders. There you can join over 9,000 real estate agents, loan officers, housing counselors, and even DPA providers as they discuss best practices with down payment assistance programs, first-time home buyers, working with lenders, learning from each other, marketing ideas, it goes on. And you can listen in and learn or participate in the dialogue and engage with your peers. So I'll leave you with a case study that illustrates how important down payment assistance info is for realtors and home buyers. Amber was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore homeownership. So she stepped in and learned all about DPAs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So help tell their story. Help them, and they will refer their family members and friends. In closing, feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And with that, we'll actually go to our Q&A session. We'd love to hear from you all.
Awesome. Thank you, Will. This is Sean. So we're getting a ton of questions. These are great questions, guys, and we're going to keep answering these. The most common question we get, and we're seeing a lot of that today, is how do I find a lender that offers these programs? We've seen several of you comment or in the Q&A ask the question. When I reach out to loan officers, they tell me that hardly anyone qualifies. And so it's hard to find a loan officer that can, will, and wants to do down payment assistance programs. So I want to address that, and then we'll kind of go around the horn here with our team and address some of the other themes that we're seeing. But when you're looking for lenders, loan officers that offer these programs, there's a couple things you can do. So yes, some of these programs have, income limits, purchase price limits, and so forth, but those can be surprisingly flexible. Now, some of these programs premium price their interest rate to allow for the opportunity for down payment assistance. That's not the only way that DPAs are funded, though. There are a lot of other ways that down payment assistance programs and funds become available that don't impact rate. Nonetheless, no one lender participates in every program, and not every lender offers down payment assistance. But if you're looking for a lender that offers these programs, always start with your current loan officer partners, ask them which programs they offer, and if they're savvy and familiar with the process and the protocols for getting those programs done. Also talk to your peers and your broker. See if they have a recommendation or a referral to a loan officer that offers these programs, or that maybe they've worked with in the past that does them well. And then we also show you in any part of our down payment resource platform, whether you're a Down Payment Connect user, whether your MLS is a partner and you're seeing the down payment icon on listings in your MLS, or if you're just doing a search on downpaymentresource.com, when you're looking at the results from a listing or a search or a property, the results, the programs that may be available, you can click on Learn More and learn basically the next steps, the kind of action items or takeaways. And the first thing we show you or your clients is who the participating lenders are, unless they're using Down Payment Connect, and then we only connect them back to you. But you can find out who the participating lenders are as linked and published on the program provider's website. So you can use Down Payment Resource to find lenders that way. We always encourage people to start with your state housing finance agency. If you're looking for lenders that participate in these programs, go to the state housing finance agency, go to their website, call them. We give you their contact information in Down Payment Resource as well, and ask them, who are your top producing loan officers in my market? Who are the LOs that submit the best files and close on time and so forth? So there are several different ways to find loan officers that offer these programs. I'll put this out there, and it might clutter up the chat box, but in chat, if you're a realtor and you're looking for a loan officer that does DPAs, throw that in the chat. We have loan officers on this call too, and a lot of them work with down payment assistance programs. So give that a shot. I don't mean to clutter up the chat, but let's use Q&A for questions, and you'll have to give them your location, guys. I already see people posting. They need to know what market you're in. So give them a city and a state, and let's try that out for a minute. But let's go to Mel, and then Tracy, and then Veronica. Mel, any themes you want to cover here?
Yeah. Hey, Sean, the how to find a participating lender has definitely been a hot question for this session. But I also, I like to remind everyone, because I've had this question a lot as well. We did record today's session And we will be sending that out tomorrow along with the slides for everyone that was late or if you couldn't make it. So don't worry, we'll be sending that out to everyone so you'll have that. And then another question that I've gotten a few times on this session are people looking for Spanish-speaking homebuyer education classes. I will say that, and others may have comments on this as well. I'll say that I know a lot of homebuyer education providers do provide classes in Spanish, but the two big online ones like eHome America and Framework definitely have Spanish-speaking classes available. So I just wanted to point that out. I've answered that question a few times on this session.
Tracy, what do you see and what do you want to address?
Hey, Sean. Yeah, we've had a very active group back here. I feel like we've had quite a varied list of questions. There are definitely some interesting open ones that are still in here that I think that will be interesting to get to soon. So I don't know if you're ready for that or if you were just like looking for the more common ones at this point.
Yeah, let's well, so there are a few trends in here. Like I saw a few actually loan officers on here that are brokers. I want to address this real quick. So let's just say a lot of down payment assistance programs are for retail lenders. So loan officers, I'm kind of speaking to you for the moment. We do track and monitor in our system some kind of broker DPAs, if you will, and Down Payment Connect is a great way to find those. But I will say, talk to your wholesale partners, find out what they offer, what they accept. We work with lenders on the wholesale side too, and they're opening the door to DPAs. So talk to your account rep, talk to your wholesale partners, figure out which DPAs they offer. And there are some broker products out there that you can find through Down Payment Connect that also allow you the opportunity to access DPAs that way. And I will also say to loan officers, scroll through the chat. I set off a bomb here. There's a lot of stuff in there, but there are a lot of realtors around the country that are looking for a loan officer that does DPA and does it well. And they're telling you where they're located in the chat. So scroll through there if you're a loan officer. There are a lot of realtors asking for your help. Let's see, what else? I saw some questions about layering. Veronica, do you want to take that one and talk about layering DPAs for a moment?
Yeah, actually, I was going to mention that one, but real quick in what you were just speaking about in regards to wholesale brokers, there are state HFAs that do allow TPO, which is third-party originators, and then there's also providers that allow TPOs to work through a correspondent lender. So there are ways that wholesale brokers are able to still participate. It just may be working through another way. So we do actually, like Sean was mentioning, capture the correspondent availability and through that way as well. Real quick about layering, I did see a couple of questions in regards to, too high of closing costs, that there's programs that are helping to assist with the down payment side of it, but not enough for closing costs. And then are you able to use more than one program? Absolutely. There are programs, grants, down payment assistance, second mortgages, second liens, however you want to word it. There are multiple programs that can be layered. Use them all, combine them all. Typically, you can't layer a bond program with another bond program. So if you have a bond funded program, you can then layer a grant, a true grant where the funds do not have to get paid back and it's through another funding source. You can even layer a bond with another second lien and a grant. And then don't forget mortgage credit certificates as well can be combined as long as the other programs are not bond funded.
Good deal. I saw several questions or comments in Q&A and in the chat about several different scenarios that I'll address at once. The two that I saw most recently were, I have a buyer who is either disabled themselves or has disabled household family members. Also, I have a buyer who's a veteran. In both cases, yes, there may be unique additional programs for those audiences, disabled household buyers or disabled household members or veterans. But remember, realtors, your client who is a veteran, they can apply for any DPA. If your client is a teacher, they can apply for any DPA program as long as they're income credit qualified and so forth. They're eligible for any DPA that the rest of the general public is eligible for. Same thing if there's a disabled household member. One of the points that Will was making earlier is that in some markets, there may be unique programs targeted to veterans or disabled home buyers. Not in every market, not all of the time, but those are additional options that are available to that audience of, let's just say, veterans that could be used with a VA loan or cover closing costs or whatever. So just because somebody is a veteran doesn't mean they can only apply for a DPA for veterans. They can apply for any down payment assistance program. And as long as their income and credit and otherwise qualified, then that's perfectly acceptable. There just may be sometimes additional programs for people in certain professions or disabled household members or with military service and so forth. We're seeing in the Q&A some requests for loan officers. Throw that in the chat, and guys, we'll in the future probably have to look at a better way to do this, but we're trying to enable people to connect here. We're seeing a lot in chat, realtors requesting help and loan officers reacting. Loan officers, if you're looking for realtor partners, they're looking for you. So scroll through the chat there, or post your information, tell them what market you're in and let them know you're a loan officer. I'm seeing a lot of Gmail addresses being posted here, so not sure if those are LOs or realtors, but use the chat for that and let people know where you are. Let's see what else here. Will, I don't know if you're checking chat or Q&A. Is there anything else you wanted to cover? Anything you're seeing in chat or Q&A that you want to cover? We still have plenty of time here.
Don't have it open here, unable to open it. Something's going on, but just to kind of piggyback on your point, if these conversations are going on in chat, perfect time to kind of move that conversation over to the Facebook group page as well. Right after this webinar, I'm sure others would want to connect.
Yeah, that's a great point. And actually, can you go back a slide? Or maybe it's two. Let's throw the Down Payment Insiders Facebook group up there. We see a lot of networking in there too. And guys, that's a group of real estate agents, housing counselors, DPA providers, loan officers all over the country, networking, sharing their stories, successes, challenges, marketing ideas, and so forth. So we do encourage you to join that group too, and listen in or network or provide your own stories there. Let's see, we got some open questions in Q&A. Let me tackle a few of those for a moment. Ron, I think we had kind of addressed your question about wholesale investors. I can't speak for pricing when it comes to wholesale investors and them allowing DPAs, but I would talk to your AEs, see if they allow community seconds maybe instead of housing finance agency programs, and maybe there's some pricing benefits there. Pricing is so fluid right now. It's really hard for us to predict what's going to happen to one of your questions. But there are some broker DPAs in our platform as well that are for brokers through certain wholesale investors. So check that out too. Let's see. Thomas asked, he sees DPR eligible, the DPR icon on MLS listings that are cash only. Cash only is not a field that we get when we determine eligibility. The property itself is still eligible for help based on location and price. Cash only is a limitation enforced by the seller. If that were to change, the property would still be eligible. It depends on your MLS as to whether there's sort of an opt-out of the DPR icon, but that's something we'd have to handle as a one-off. Let's see. Carl asked, he's been able to get his clients down payment help. However, closing costs have been high. It seems like lenders involved with the program are charging points up front. That brings the closing costs up higher. So, Carl, I can't speak to lenders and what they're doing. But, sort of broadly speaking, yes, DPAs can help cover closing costs as well. Why are the points being charged? excuse me, is it to bring down rate? Is it to accomplish some other goal that is enabling that buyer to purchase a home? That's a conversation to have with your specific loan officer partners. LOs in the chat, if you want to chime in, give us your feedback, give us your insights. We got realtors asking questions here about how to get these deals done and how you do it. Throw it in the chat. How do you get these deals done? How do you overcome pricing challenges? How do you ensure they get the right product and you can qualify more buyers? Let's see. Dion asks, I heard that many of the programs are not happening right now. Are they still active? How do we know which ones are still around? That's a great question, Dion. 84% of all programs are funded and active today. And that number's been pretty consistent for a while. There are plenty of ways to figure out which programs are active. You can go to downpaymentresource.com and you can do a search, and we tell you very clearly which programs are out of money. But those are moved to the bottom of the list below all of the programs that are active, funded, and available. If you are a member of one of our MLS partners, and actually, Will, if you can scroll back to the list of MLS partners, let's put that on the screen for a minute so everybody can see that. If you are a member of one of these MLS partners, then you can click the down payment button on eligible listings. It's a little $ with a check mark. Will can show you that here in a sec. But if you click that, we tell you which programs are available for that property. And there's the down payment button on the screen. Look for that on listings if you're a member of one of our MLS partners, typically on the single line and the agent detail views. Your clients can see it too. But we'll tell you which programs are available and which ones have money, and the few that don't, if applicable. So Dion, most programs are funded. It's a matter of finding loan officers who actively participate in these programs. Let's see, I'll pause here for a moment. Veronica, anything that you're seeing in here that you want to address?
Someone's asking for the first-time home buyer definition again.
You want to cover that one?
Sure. It's anyone that has not had ownership interest in the past 3 years.
And then there can be some exceptions to that, right? So can we talk quickly about title and who was on title and so forth?
Yeah. There's also, so not to make it even more difficult, but FHA versus the GSEs like Fannie Freddie, they might have a slightly different definition where one has not had ownership interest in a primary residence in the past 3 years, and one of them is just no ownership interest in the past 3 years. So it's based off of which insurer you're going with or investor you're going with for the first mortgage. And then the agencies themselves will be specific as to their requirement for the DPA program. There may be exceptions as far as divorce situations. If, not remembering the exact words off the top of my head as far as that goes, but there are exceptions to the rule in regards to divorces and separation of household.
Good deal. But basically 3 years. Remember that. You're a first-time home buyer for the purpose of DPA if you have not owned a home in the most recent 3 years, with some exceptions, but that's the general rule, or the 3-year rule. Let's see. What else? Can you remind us of where we can find marketing materials, social posts, etc.? So if you, Will, I don't know if we had a screenshot for this, but if you are a member of our MLS partners, you can go to your MLS dashboard and find the link to Down Payment Resource. That takes you to your free Down Payment Connect page. That takes you to, there are all kinds of, so there's kind of a version of that dashboard. Or if you subscribe to Down Payment Connect, you also get a dashboard with not just your Down Payment Connect lead generation page, but also marketing resources to support that. And in fact, Mel, maybe we can put a link in the chat to our marketing resources page where you've got flyers, customizable flyers in English and Spanish, graphics packages, video tutorials, a direct link to our Facebook group that we just showed you. There's all kinds of stuff in there, and we'll put a link to that marketing resources page in the chat. Let's see. Guys, we're going to keep going here. We still have a huge audience and we got a lot of questions coming in. So we left time for Q&A because we know there's always a lot of questions here that hopefully help you guys as we go. So Richard asked, are the default lenders suggestions able to analyze potential clients for all programs they would qualify for, or only matched with the lenders who service the appropriate response? Let's see. Who determines the total number of eligible options? Basically, Richard is asking who's determining what a client, a consumer, a home buyer, a borrower is eligible for. So in down payment resource, we show you all available options. Lenders, you are able to limit that display to the programs that your lender participates in, that your company participates in, or that you have access to. But ultimately, the answer is when your buyer goes to get qualified with a loan officer, that loan officer is going to look at income, credit, price, loan amount, mortgage options, all manner of things, including the available down payment assistance programs that they can offer, and they're going to find the best possible solution for that buyer. So, that answer could be different, quite frankly, between 2 or 3 different loan officers, because their companies may offer different DPA programs and so forth. So Richard, that's sort of the broad answer to the question. But when you go to downpaymentresource.com, or if you're a member of our MLS partners and you're clicking the down payment button from a listing, you as a real estate agent are seeing all available programs in that market for that property, for that buyer, at that price, at that location. Let's see. Melinda asks, how likely would it be for an elderly couple to get down payment assistance with a limited income? That's a great question, Melinda. We get this often. So older home buyer, or anybody on Social Security disability, on Social Security retirement income, or fixed income, essentially. And that's a great question. There's nothing preventing them from qualifying for a mortgage and or down payment assistance, so long as they income and credit and otherwise qualify to get, of course, the mortgage if we're talking about financing a home. But yeah, they just, they can't exceed the income limits. They have to meet the qualifying ratio requirements. That's an individual determination based on the buyer, but certainly being elderly is not a disqualifier for DPA any more than it's not a disqualifier for a mortgage. Another question here about an older client looking at manufactured homes. So I addressed the kind of age question there, but let's talk briefly about manufactured homes. We've seen several questions in here asking about the purchase of manufactured, and we're seeing a lot more attention recently on manufactured homes as a more affordable inventory alternative in such an inventory crunch as we're in right now. So you can, on maybe, I think, Mel, you might know this number off the top of your head, but how many programs allow manufactured homes roughly?
I don't know exactly the number of programs, but I believe the percentage of programs is around 28% per our last report.
So more than 1 in 4 DPAs will allow their funds to be used for the purchase of a manufactured home. So obviously that's going to depend on the program, but that means there's a good chance that in many of your markets, there are several options for down payment assistance for the purchase of a manufactured home. Now, we've also seen questions in here about mobile home. I want to make the clear distinction between mobile versus manufactured. A manufactured home is permanently affixed to a foundation and will typically have other requirements, built post 1978, I think it is, and a few other things. But there are down payment assistance programs for manufactured homes. Not every program, but there are plenty of them out there. Mobile homes, we're not aware of down payment assistance for mobile homes. I'll add to that, we're not aware of down payment assistance for vacant lots. That question came through as well. And as Will mentioned earlier on, these programs are for people buying their primary residence and occupying that. So not for the purchase of vacation homes, investment properties, also not for mobile homes, and not for vacant lots. Let's see, what else? Can we send a compilation of the questions asked in the post-broadcast? We will try. There's so much content here. We're going to have to probably truncate that somehow. Let me pause here. Tracy, are you seeing anything you want to address, or Veronica?
I had a question from Ben saying, is it up to the lender to know which program will be more beneficial for the buyer?
In a way, I'll start that. Veronica, maybe you can add your 2 cents here too. It's up to the lender to pre-qualify an incoming buyer based on the products available to that loan officer, which, as you all know, that differs by lender, right? And you go to certain lenders for certain kinds of products and certain kinds of buyers and so forth. You may have a first-time home buyer lender and a luxury lender and a manufactured home lender, and they've got different products for different kinds of transactions, right? So yes, ultimately it's up to the lender to know which program is best and to qualify them for the best path toward home ownership. Veronica, though, anything you want to add to that?
I would add that the lender also is going to be looking at, the funding source of the program. There are some programs that, although they may be for down payment and closing cost assistance, depending on if you're, just as an example, FHA financing, because FHA has specific rules and guidelines, they may find that utilizing that program funds can only be used towards closing costs. Well, the lender is going to make that determination and let everyone involved know that those funds can only be used towards closing costs. We still need assistance with down payment. And then you would then, go look for the layering possibility of still getting more assistance out there. The lender is going to know what can and can't be done. They're going to help. But the realtor, I think it is very important that you also are aware of these programs, and especially in your market. That way you can help also guide, because you're going to be building a relationship as well. So if you have a little bit of that knowledge and background with these programs, that's only going to make it stronger and a faster, smoother process for everyone involved.
Yeah, absolutely. And it'll help you align with the right loan officers and know where to go for certain types of buyers, right? Couple things here. There's some recent comments in chat about FICO. I just want to reiterate, the lowest FICO requirement we typically see on down payment assistance programs is 620, but there's kind of a range there: 620, 640, 660. Those are pretty common minimum FICOs. There may be a small few programs that will go below that, but you also have to qualify for the first mortgage as well. The DPAs themselves, though, typically want to see something like a 620, 640, 660 FICO. So I just wanted to clarify, 620 is not a universal number. That's just kind of the lowest we normally see. I also want to address buyers moving from one state to another. We've seen a few questions about that. It's certainly acceptable to use a down payment assistance program in the new state you're moving to. There's typically nothing disqualifying you from doing that, as long as you're going to move to that new state and occupy that house as your primary residence. Let's see. Purchasing land. There's a question in the Q&A right now about purchasing land and also about a hearing impaired child. So purchasing land, that would be a vacant lot, and DPAs cannot be used for that purpose. We are not aware of down payment assistance for vacant land, for mobile homes, for investment or vacation property transactions. And then as far as any suggestions for a hearing impaired child? So Sherry, yeah, any down payment assistance program out there, that would be my suggestion. Is, the parents of that child presumably are going to go apply for and get pre-qualified for a mortgage, explore down payment assistance options. And again, that's one of the scenarios where they're eligible for, or potentially eligible for, any DPA. They don't have to look for a down payment assistance program for disabled household family members. There may be a unique program like that in the market, but there may also be 15 other programs, and they're all available to a qualified buyer. Let's see. We'll take maybe a few more. Let's go around the horn with our DPR team, and we'll take what's left in the Q&A or anything you've seen in chat, and just kind of final thoughts here, and then we'll let you wrap this up. Veronica, you want to go first? Any final question you want to address here, or anything you want to reiterate?
I had mentioned mortgage credit certificates earlier, and there was a question that came up in regards to who applies for that. There are programs that the lender is going to apply for these programs on behalf of the borrower. For example, local and state HFA programs. The lender has to be an approved lender to participate in those, and they have processes in place that will require them to apply on behalf of the borrower. So the same thing with the mortgage credit certificate. The lender has to be an approved participant. They will apply for that on behalf of the borrower, but it has to be done before the loan closes.
Yep, MCCs, as with any DPA, you cannot retroactively get down payment assistance. We get that question a lot too. Yeah, it's got to be done before closing. You got to do all this in parallel with the first mortgage. Tracy, any final thoughts, recommendations, anything you want to reiterate?
I just want to reiterate that I still see some questions coming in about the recording of this. We will be sending everybody that registered for today's webinar a copy of the recording, and it will include the slides as well. So just so everybody knows, that will be coming to you likely by the end of business day tomorrow.
All right, good deal. Will, can you put our contact info up on the screen here while we wrap this up? Because that's going to be the best way for everyone to contact us after this webinar. Guys, we still have questions coming in. We're still seeing activity in chat. There's no way we can get to all of this, and we're just a couple of minutes to the top of the hour here. So Mel, final thoughts?
No, Sean, honestly, not for me. I'm over here trying to manage to the Down Payment Insiders group, where there's already some good networking going on. So just want to reiterate that. I know you guys have been posting a lot in chat, your contact information, searching for loan officers and agents, and that does continue in our Facebook group. And it is right now. So just wanted to say that, but no, I haven't seen any other trends, if you will.
Okay. So Will, a couple things here. Can you go back to, I think one or two slides to the testimonials, to Amber's slide? Yeah. So I think there were a couple people that wanted to see that and just kind of read her story. There's her name. She's a stellar MLS member in Florida. And then let's also one more time show the Down Payment Insiders Facebook page. So we're already seeing a lot of people jump over to that Facebook page and get involved and start to network. So we'll probably at this point push any networking over to that site, that group. So there's your URL there. We encourage you to go join Down Payment Insiders. And then Will, if you can go back to info at, guys, if you have any other questions, we're gonna kind of cap it here. Reach out to us at info@downpaymentresource.com. And then Will, I'll let you close things out.
Okay, thank you all. Well, as our team has said, on behalf of all of us, we're happy that you joined us today, and we hope that this information is useful to you. And as always, thank you, and we hope to see you again.